on President Trump's promises. Building materials companies are the big winners of that Trump rally that pushed the market higher this week and pushed the Dow Jones Industrial Average past the 20,000 mark for the first time ever this week, and it hit it, of course, second day in a row yesterday. Stocks are rallying after the president signed an executive order calling for a wall along the Mexican border, and, of course, a lot of anticipation about lower taxes and about a rollback of regulation. Joining me right now is U.S. Concrete CEO Bill Sandbrook, along with Summit Materials CEO Tom Hill. Gentlemen, good to see you. Thanks so much for joining us this morning.
Good morning, Maria.
Let me kick it off with you, Bill. We've got a lot of plans that we've been talking about, whether it is new infrastructure projects on the horizon or the wall being built on the southern border, among others, or perhaps tapping into the energy business. What kind of an impact are you expecting?
Well, let me put that in context for you. U.S. Concrete is the largest publicly traded U.S. domiciled concrete producer in the country. We have over 170 concrete plants, over 1,600 trucks. We operate primarily in California, Texas, Washington, D.C., New Jersey, and New York. We're well positioned to capitalize on any increase in infrastructure spending or on any opportunities afforded to us if the wall is made out of concrete.
Yeah, so, I mean, your stock is up 4% in 2 days. We know your stock has been reacting to what we're hearing out there. Have you been contacted in terms of contracting your company for any of this yet?
No, not at all. It's way too early for that. It needs to be designed. The contracts need to be let. We need to take a look at the specifications to see what opportunities we are. I expect that in the next couple of weeks or months, though.
Tom, what about you? Speaker Paul Ryan and Senate Majority Leader Mitch McConnell announced yesterday Congress is willing to approve $12 to $15 billion in funding for the president's border wall, but there's still uncertainty over whether the U.S. will be reimbursed by Mexico or not. What's your take on all of this?
You know, I think more important for Summit, we're a diversified, vertically integrated, heavy building materials company, which means we manufacture cement, construction aggregates, ready-mix concrete, and asphalt. And about 40% of our business goes into the highway business. So, you know, when I hear President Trump talk about a $1 trillion infrastructure program, he always mentions highways. So it's really the highways element of this that is very important to us. We do business in 20 states and 1 Canadian province. We're a pretty new company. We started from scratch in 2009. We were private equity backed. We've done close to 50 acquisitions and really created a very fine business of scale, doing about $1.5 billion of revenue and 365 to 370 million of EBITDA. So President Trump is the first president in decades that has really emphasized infrastructure. And, we sort of see with President Trump's emphasis, with a lot of work in the states, that we do really see a new golden age of infrastructure development.
Yeah.
You know, our highways, our airports, our water, is really a need.
Absolutely, and I think it will be a priority. How does this work, Bill? Because, we had an analyst on the other day here on the program, Dick Beauvais, top banking analyst, and he said this is going to be a bonanza for the banks as well. He said, look, somebody's got to fund this stuff. And the president has talked about private-public partnerships. How do you see these things happening? Do you expect that the banks would be among the participants in terms of funding part of this?
I think there's going to be multiple sources. I think banks, private investors, the U.S. government through additional users' fees, perhaps repatriation of taxes. It'll be multiple sources of funding for the transportation infrastructure bill. However, for our company, we have only 16% of our revenues come from transportation infrastructure. 84% come from other uses of concrete, commercial and residential home construction, for instance. So we're just as excited about the tax programs that President Trump might revise, as well as the lessening of regulatory burdens to help the overall economy grow from a 2% average GDP to over 4%. So that's much more impactful for us than even the infrastructure side of Trump's plans.
What are you seeing so far in terms of bookings and in terms of business right now? Tom, you first. How's the environment right now? How would you characterize business today ahead of all of this?
Business has been good. Business has been real solid in all 3 sectors. Like I said, 40% of our business comes from infrastructure. The other 60% is split pretty evenly between residential and non-residential. And all of those sectors are firing pretty well. I've sort of characterized it as a a slow, grinding recovery, but in many ways that's been very healthy for the industry. I think a shot in the arm from an increased infrastructure spend will be very good for the industry. And just to go back on that public-private partnership, I think that's very important in an overall package, but it doesn't really address the maintenance of the existing system. And President Trump yesterday in Philadelphia at the congressional retreat, said that one of the first things he's going to do is fix the existing system. That's exactly what we do. Our 40% of our work that goes into the infrastructure, we do basically repair and maintenance. We repave roads and so on. So we think that emphasis on fix it first is going to be very, very positive for Summit.
So what kind of jobs are we talking about here? I mean, when you see $1 trillion infrastructure plan on the table, when you see these plans and hear about the plans of a $15 billion cost for the wall, characterize the jobs involved in that.
Well, for us,
I'll take that.
Go ahead, Tom.
No, I said, excuse me, Bill, but I think to characterize it for every $1 billion of infrastructure spend, it's something in the range of, plus or minus 20,000 jobs. And, these are really good-paying, middle-class, solid jobs.
Wow.
And, they're $15 to $25 an hour jobs. And, and again, I'd go back to the repair and maintenance. The repair and maintenance work can start very, very quickly. They are truly shovel-ready.
That's really interesting. For every $1 billion in spend, it's 20,000 jobs. Bill, how do you see it?
Yeah, no, I agree with Tom. And in our operations, it's a little different model than Summit. We operate in high-growth areas, densely populated areas in the Bay Area of California, Dallas, and New York City. And those areas of the country have been growing at a faster rate than the average interior parts of the country. So we have a very healthy environment now. This just adds an extra wind to our sales.
Yeah, it sure feels like it. All right, the states are looking to jump in on the president's estimated $1 trillion infrastructure spending spree as well. They're coming up with their own plans, so we'll see what that does in terms of the transportation system. I guess you would be open to working on other government infrastructure projects as well, right, Bill?
Absolutely, no question.
Gentlemen, good to see you both. Thanks so much.
Thank you, Maria.
Thanks, Maria.
We appreciate it.